Hello, today is Sunday. It is 9:45 in the morning. It is December 18th, 2022. Your weekend report title is Will Santa Save the Stock Market? And this is your weekend report. Hi, this is Jonathan Gurney, Portfolio Manager at Gurney Financial. Friendly reminder this post is for informational use only. The views expressed are those of the author, Jonathan M. Gurney, that is me. This material is not intended to be relied upon as a forecast, research, or investment advice, and is not a recommendation, offer, or solicitation to buy or sell any securities or to adopt any strategy. In short, we're keeping clients aware of what we're doing, the changes we made, and what we saw during the week. So let's get started. I want to be very direct, to the point. How is the strategy doing? We're keeping pace with what the S&P is basically doing. We have beaten at times the S&P by about 20% during the month. The one thing I don't love about the current strategy, and again, the S&P is down significantly for the year, so I'm not happy about what's going on with the strategy. I'm working 100 and some hours a week. It's not sustainable. I have been looking for a partner for years, and thankfully I think I have found one. Regardless, the strategy that he has implemented is doing fantastic. He is positive for the year. He's not doing anything crazy, believes in the same things that I do, and trying to create. It doesn't matter whether you have $1 million in your portfolio or 10,000 in your portfolio. You have to have good asset management. And so one thing that I continue to preach is, if I am not doing well, I will find the help that will bring a strategy that has been time tested, believes in the same things that I do, and hopefully we can get this back on track. So let's first look at the performance of the week. And first of all, it was a down week for the market. We were in cash, so no issues this week. Last week was brutal. This week we had, it was a week for a disaster. I mean, it just, so many events. It's just asking for a whirlwind. We were seeing 3 to 4% moves a day, and if you have $1 million account, that's 40,000 a day. Not fun. Okay, I was in cash because we never regained a key level. So the S&P 500 was down 2.08%. We were flat for the week, meaning we didn't lose any money. The week before, we got hit pretty hard. But what I was seeing under the hood is that we're getting institutional selling. It doesn't matter what the cause is. I think the cause is tax harvesting. But this week we had CPI, which is inflation data. We had the Fed meeting. We had the ECB rate decision. We had jobs. And on top of that, we had quad witching. And if you don't know what quad witching is, it's a huge rebalance of the index, meaning if the big winners are doing well in the index, they have to be rebalanced back lower, and it rebalances the losers higher. And it just causes a disaster, and I did not want to be a part of that. I think we're going to get more of a true tale of what this market is going to be like this coming week. And it doesn't necessarily mean it's going to be a Santa rally. So we have to be objective about that. So there is the week performance. It was just not ideal. Sector performance, the two key areas that continue to be the strongest are basically XLE, which is energy, had a positive week. It's still not the greatest chart. The market eventually gets all the sectors, and that's usually when you start to see a turnaround. So energy might be on its last leg here. We'll see. But overall, XLE, XLU, and XLI. XLU is utilities, XLI is industrials, but they're still negative. So most everything is not doing well. We have to be real about that and not try to fight that, okay? And fortunately, we did not. Interestingly enough, the core 10, the biggest 10 stocks weighting-wise in the S&P 500 has changed. It might change back after the rebalance, but XOM, which is an energy name, got in the top 10 and replaced NVIDIA. Very interesting. Just want to point that out. As you can see, none of them beyond Facebook were positive. So hard to fight that. Another indicator here that's more of, in my opinion, a lagging indicator. The McClennan Summation Index basically what is the general market doing? The NYSE, the New York Stock Exchange in general, new highs, new lows. We were overbought and we're headed down. It's very slow moving, but it's still painful. So there's some things that are definitely concerning, which is why I'm in cash. Let's look at the key levels. Okay, as I say in the top right, we need to hold 38.27. I'm going to get to that chart. There we go. This cleans it up a little bit. 38.27, which we tested. There is a gap here, as you can see here, that I wish would have filled. I don't believe it did. I think we might need to fill that early, and hopefully we do. You're like, holy smokes, look at that volume. People were selling. That is typical with quad witching, so just kind of ignore volume. It's going to be skewed because the rebalance forces selling or buying. So the volume is going to be huge every quad witching day. And personally, I felt like this entire week, on top of the events, it's like we were hit twice with some difficult events and forced selling. So I'm not going to fight that. You can see this. Once the market opened, it was like down. Friday was kind of started low and kind of ended low. It didn't. This is a potential bounce spot, in my opinion, for the market. We are overall decently oversold on this time frame. You can see this little trend line here. We did get back above. It's not pretty, but from a technical standpoint, let's look at this. Are we above or below the 50-day moving average, which is the blue line? We are below. We're below all moving averages, so the trend is clearly down. Will we probably get a bounce potentially to the 5-day moving average? I hope so. I'm in cash right now, but it would not surprise me if that happens. Risk reward is okay to potentially add, but I've got to see a key level regained. I got to see, number one, it would be nice to hold to 38.50. After hours, it went back down to 38.40. So we're struggling with holding key levels. That could very well change next week, and I hope it does. So in terms of, does the Santa Claus rally happen? It very well still could. A lot of people get confused as to what the Santa Claus rally actually is. This is Christian Frommert's work. None of us are saying this is going to happen. Okay, we're going to follow price action, but this is his chart. And usually around the 19th or 20th after quad witching, that is when it takes off. So that people assume quad witching, or excuse me, people assume that the Santa Claus rally is the entire month. No, it's usually brutal. Like last year for me, this was a 17% gain after this brutal. And so I'm hoping this happens, but right now we're not seeing it in price action, so I don't add anything. We're in a downtrend. We got to respect that. So back to the portfolios. Listen, it has not been a good 2 years. For me, it's not a good showing at all. It has not been a lack of trying, as you know, and I'm stating this fact because I state it all the time. On average, 86 to 80% of asset managers underperform the S&P 500. That has been me the last 2 years, and I'm not going to do that anymore. It has not been a lack of trying. I think the current strategy actually does work. However, it allows for a little bit too much human emotion, whereas the strategy that I'm bringing on is if X, then X. Boom, trade happens. And it's not going to listen to the chirp that I'm getting every day in my ear from clients. It's going to stick to this strategy, and I think that's going to be very, very good. So I'm looking forward to introducing you to a potential partner. We're still kind of working things out to see how this could work, but regardless, he's got a great track record, and it's not just for the last 2 years. I mean, he's beating the S&P by about 30% total over the last 2 years, and that's during a very difficult market. Last year was a little easier, but this year he's still positive in a terrible tape. So clearly what he is doing is working. He follows a lot of the same indicators that I do. And he doesn't discriminate between large accounts and small accounts. And I love that. So we believe in the same thing, a great service that is inexpensive, that could be applicable to all. Okay, that's really what we're trying to do. I'm not trying to be out here charging 2-3% a year and underperform the stock market. So in short, I need help, and I've been searching for this for years, and I think we're getting there. So many of you have asked for portfolio, a variety of different portfolios, or have just decided to go in the index, which I would be very careful with at this point. But we are going to be adding about 2 or 3 more portfolios that I do believe will add some diversification, but also have a track record of beating the index. And that's really what we're here to try to do. So stock market is hard. It will kill the majority of you. But at the same time, we've been incredibly blessed the last 10, 15 years. The last 2 years have been a little bit brutal. So I'm due for some outperformance, and I think that this will help get my mind right over, after a terrible 2 years. I'm just being real with you, very direct. So look forward to that. Thanks to Christian Frommertz for this work, and we look forward to seeing what we can do with these new portfolios in 2023. So we still could have a nice rally here. I'm not giving up on that. But right now we haven't seen anything to show any sign of a rally yet. So from a calendar standpoint, that could be happening this week. We'll definitely be watching. So just wanted to get a quick video out and kind of show you what's happening. Clearly forced selling at this point. I mean, direct downtrend. This is a 6% move. Boom. Fortunately, we were out this week. There were opportunities, but there were so many events that could literally move you up or down 4%. And I'm just like, this risk reward is terrible. Risk reward is improving for a potential bounce. Whether that bounce holds or not, that's what we're gonna explore next week. So have a great weekend. Thank you guys. We're working very hard to. Gurney Financial is at a point where we have to add somebody, period. It's hard to find the right people because anybody good is $250,000 in salary plus. So we have to really work, and I'm not making anywhere near that. I'm struggling to stay alive. So this is a tough business, and we're working our hardest to give you the service that you deserve and give you the results that we think everybody should have, not just the wealthy. So thanks, guys.